let's talk about what a crypto wallet is, how important it is, and how you guys can use one too. So we're going to discover how to securely manage your cryptocurrency, whether virtually or via offline ways such as USBs. And you guys can pretty much just store your bread within secret spots, however you want. And let's go and let's get into it. So here's a quick introduction to crypto wallets. So understanding the importance of crypto wallets in the digital economy. So a crypto wallet is essential for anyone interested in participating in the world of crypto. So in order to send crypto or receive crypto, you're gonna need a wallet. You guys can use various sources. There's gonna be a few: Trust Wallet, Phantom, Coinbase, a lot of different brokers you guys can use, etc., in order to store and receive your cryptocurrencies. Okay, and send it as well. Okay, this is gonna allow you guys to send, securely store, and receive digital assets and cryptocurrencies while providing access to blockchain networks. Understanding how these wallets works are crucial for safe and efficient transactions. So understand something about crypto wallets too. Whenever you guys do send that send code or receive code, every single code has to be accurate. Please make sure you're always copy and pasting. Don't ever try and type the codes manually, because a lot of the times it's not going to work out in your favor, and you're most likely going to mistype something. And if you mistype something, someone's not going to receive their bread, and you might just send money into the void for no reason or to somebody else. Okay, so make sure you're always copy and pasting your codes, whether you're receiving or sending your transactions. So understanding how crypto wallets work. So here's a comprehensive look at what crypto wallets do and their importance. So a crypto wallet is a tool for managing your cryptocurrency assets. It securely stores your public and private keys, allowing you to interact with blockchain networks. This functionality is essential for sending and receiving cryptocurrencies like Bitcoin and Ethereum safely. Once again, those codes I just talked about, your wallet holds those codes, and those codes you send for peer-to-peer transactions. So you send one code to a human being or to whatever program or something like that. If you guys are sending crypto to like a broker for trading or something like that, etc., then you would send your send code or receive code to wherever needed to, doing a peer-to-peer transaction. So everything is going to be done between those public and private keys, and those are going to be the copy and pasted codes. Every single wallet, every single person has a different code, and that's what's super duper cool about it. So the genesis of Bitcoin Core. Okay, and also with those codes, they're kind of very similar to, think of it like accounting and routing numbers for bank account. Just like everyone has a different one, has a different accounting number, then you have to understand that everyone's gonna have a different wallet key as well too. And that's how interactions work. Okay, so understanding that the first crypto wallet created by Satoshi Nakamoto was in 2009. So in 2009, he introduced Bitcoin Core. This is the first ever crypto wallet, and the groundbreaking tool allowed users to store and manage their Bitcoin securely, pioneering the way for future wallets. And its command line interface set the foundation for the user-friendly applications we see today. Okay, so Bitcoin Core, you guys might have seen the white pages from Bitcoin as well too. Bitcoin Core is going to be the first piece of data being able to store it within Bitcoin. Okay, was Bitcoin Core. So before Coinbase or anything like that, it was Bitcoin Core, and like a piece of paper with the QR code as well too that you could use. Okay, then from there we went to USBs, etc., and then stuff started going virtual, offline wallets, etc. And we're going to talk about how crypto wallets operate. Speaking of that, so understanding that the step-by-step process of cryptocurrency transactions, they generate private and public keys once again, allowing users to receive and send cryptocurrencies. So while the funds are recorded on the blockchain, they are not physically stored in the wallet itself. This process ensures secure access and transaction authorization. So understand that it's not anything trapped within like a bank account, for example. Everything is done between codes and wallet transactions. You guys are also going to be able to grab your transaction IDs, copy those, and put them in transaction ID confirmation checkers. And you can actually see if the other person received the money or when you're going to receive your money. If a transaction has a confirmed on the blockchain, most likely it's going to go. Okay, so until a confirmation has arrived, then a party is going to receive the funds. Okay, So everything is done on the blockchain. It's kind of like its own offline bank account system on the back end. Okay. So if you ever hear of the blockchain, just think of its own back end bank account system. Okay. Just for strictly for cryptocurrencies, meme coins, etc. Whatever you guys are sending on the blockchain, Ethereum, Solana, etc. So there's going to be various different types of crypto wallets as well too here. So there's going to be hot wallets. So hot wallets are going to be most likely 99% of the time they're going to be online. You're going to have Coinbase, Phantom Wallet, Phantom does have buy features now. So Phantom Wallet, BitUnix, Trust Wallet, Cash App, Robinhood, tons of other little brokers you guys can use to store and buy cryptocurrency. Okay. That's going to be what a hot wallet is. Then there's going to be cold wallets. Okay. So you guys might have seen things such as people digging in the trash or excavating big sites, spending hundreds of thousands of dollars, spending millions of dollars trying to find a single flash drive, for example. And the reason why that flash drive would be so important to them is due to the fact that it would have cryptocurrency stored on that flash drive. So you could store cryptocurrency on a flash drive. You can store it on little offline ledgers like that. But if you do lose it or it breaks or something like that, that's going to be completely on you. And I recommend having your bread in various different sources when it comes to crypto like that. One of the easiest ways to do it, you can kind of incorporate offline and online technologies, is a lot of the times you guys will get a 12 key phrase on whatever breaker that you use. You guys can just log in with that 12 key phrase if you want. You could put that 12 key phrase on a piece of paper, print it out, put it in a notebook somewhere. You guys can also put that 12 key phrase on a USB, put it on multiple USBs, just have backups. You could write it backwards on something, you could have that 12 key phrase pretty much anywhere. That way you guys will pretty much never lose your bread, inshallah. Okay. So hot wallets are going to be less secure than cold wallets a lot of times, especially if you guys just do something like log in with Google. If someone gets in your Google and has a 2FA bypass, then your funds and stuff like that will be accessible, and you could easily get robbed in the jug. But with cold wallets, using the offline key phrases, using USBs, using offline ledgers, stuff like that, then you're pretty much going to be almost impossible to get hacked and pretty much, just preyed on. So make sure you guys are protecting your private keys. So your private key is essential to accessing your crypto. Keep it secure and never share it with anyone to avoid losing your assets. Just keep the key to yourself, unless it's like your loved ones or something like that, unless you're passing it down. Other than that, just don't do it. And even if you're doing that, you could just rewrite something and just sort of leave something out. Okay. So use hardware wallets. Okay. For large amounts of crypto, consider using hardware wallets. They provide an extra layer of security by storing your keys offline, making them less vulnerable to online threats. But then again, they are vulnerable to physical threats. If your house burns down, if a big storm comes through, if your house floods, something like that, if you lose the USB stick, if it breaks, those are all possibilities as well too. So not everything is perfect in this world. You just have to outweigh your outcomes. Okay. If you guys are going to use online ledgers though, I recommend you guys enable 2FA. Always enable 2FA to protect your accounts. That's the little code you get on your phone before you're able to log in. You might have seen it on things like Google or something like that, for example. And this adds an extra important security layer, requiring a second form of verification before people can just access your crypto funds. Okay. So that's going to be that. If you're struggling with crypto and you want to understand, StackMODE.net. Catch you in the next one. Stay prayed up with God. Peace.